Hi, Vieira with the stockmarketlive.tv. Today we are going to comment on some companies trading in the US stock market, and the title of this presentation is How Goldman Sachs is Blowing Up Your Entire Portfolio. We are going to refer to, in the first place, Chipotle, strong sell at stockmarketlive.tv since $720. We have an article posted live on the blog of the company recommending to close long-term positions in Chipotle at $720. Since then, we downgraded the shares to strong sell. We explained it on the blog of the company, and we recommended a large short position in Chipotle within $720 to $750 when these stock analysts in the United States, they were raising targets in Chipotle to $800 plus. Meanwhile, Chipotle shares collapsed. There were some issues. Today, these issues are public. However, the issues, they were already public, in fact, or known by professional investors when shares, they were trading at $720, and therefore Chipotle became one of the best-selling short opportunities in the US stock market. And if you have questions with regards to how to invest in Chipotle, you have an article with clear instructions made available to subscribers to this service, Live Markets Premium, selling short Chipotle the most in a decade, ahead of the crash. So today you have Chipotle on your screen, live tape trading at $497. It is not the first time that I made some comments with regards to Chipotle. 1 week ago, the CEO of this company came up to say, to apologize before the public for the known issues. The impact that that apology had at that time, Chipotle share price opened higher, more or less $26, or the equivalent to 24%. It means that once again, Wall Street, and in particular the American investor, was buying shares of Chipotle while we were downgrading Chipotle to strong sell. There were no change of rating whatsoever. Moreover, there is a video available in our website disclosing a very important stock pivot. While shares will not break that same pivot, this stock will remain a strong sell. Therefore, today, shares, they are down more $100 since then. Perfectly normal. Those of you who didn't assume a short position in Chipotle, you have a serious mental problem. This is the company that a few months ago, there was a politician in the US saying that Chipotle was good to buy, Chipotle was very good to eat, okay? When they said that on Twitter, we downgraded shares of Chipotle to strong sell. You have the article on the website. Are we clear about this? Wonderful. So, $497, congratulations to all the investors following my personal guidance. With regards to the company on the left-hand side, Kite Pharmaceuticals, there is an article on the blog of the company saying this company is a strong buy, in fact it is a former strong buy, with a price target $85. The company reported earnings, it traded to $87, above my own personal target. What did happen since then? Shares, they crashed, plunged. Why? I didn't raise targets. I downgraded strong buy to sell, recommending to sell short this company. Why? Goldman Sachs upgraded and initiated coverage of Kite Pharmaceuticals with a price target $111. You have it on Google, so Google it. Goldman Sachs once again upgrades the company at the very top. So today you have a crash in Kite Pharmaceuticals. This stock plunged $15 per share since Goldman Sachs upgrade. So perfectly normal. The same is occurring in Chipotle. But we are not going to terminate here. We are going to make some further comments with regards to articles that they exist at stockmarketlive.tv with very clear recommendations. One of the best financial stocks to sell short in the industry, American Express, precisely the same situation. Goldman Sachs a few months ago upgraded and raised the targets in this company to a price above $100. Where is American Express today? $68.83. $680.83. It is not $110. It is $68.83. Goldman Sachs did the same with regards to Apple. Apple is a stock trading at 107. In February 2015, they raised the targets in Apple. During the course of 2015, they continued raising targets in Apple. Apple, meanwhile, crashed. Why did it crash? You have the rating at stockmarketlive.tv downgrading Apple to sell at $133 live on the blog of the company. So Apple shares, they crashed twice since the most recent crash. It occurred all the way down to $92. But since the title of this presentation is how Goldman Sachs is blowing up entirely your portfolio, we are going to continue with some further suggestions. For example, this company here, Abercrombie, recently reported earnings. They said that is the best earnings that they had in the past 10 years. Goldman Sachs, after the company reported earnings, said that Abercrombie had a price target $14. $14, you Google it. If you have questions, use Google. For some reason, Google exists, so learn how to type. Abercrombie, Goldman Sachs, price target $14. Since the company announced earnings, share price today $27.03. New highs. If you had a short position in Abercrombie, Kite Pharmaceuticals, and so on, and Kite Pharmaceuticals, you were long, believing in 111, or long American Express, you are blowing up entirely your portfolio. The other day, I already explained the case with Morgan Stanley, so today is dedicated entirely to Goldman Sachs. But since we do not focus only in one company or one example, I already gave you here or discussed at least 5, we are going to continue. So one more, Goldman Sachs has been bearish this company, 5, okay? You know 5, if you don't know 5, Google it. The company reported earnings. The earnings, they were excellent. The stock was trading around $29, today $32.54. It was a buy, in my opinion. I was also bearish this company. I recommended to close the short position going long the stock. Maybe the same here can happen as it happened in Abercrombie. So the shares, they have been moving higher. Goldman Sachs had a bearish opinion with regards to 5. The company reported, I repeat, very good earnings. So one more example. But we can continue. I'm going to finalize with the example of Under Armour. Under Armour and Lululemon, you find articles on the website ahead of the crash. In both cases, Lululemon crashed, and the same happened Under Armour. Today, this company was trading in the morning below $78. Okay, $78 was more or less the intraday bottom in Under Armour. You had plenty of time to sell short this stock since I downgraded. And you have the article at $97. which I said to be my personal price target. At that time, at $97, Under Armour, what Wall Street did was to raise targets to 115. Well, but they did the same in GoPro, they did the same in Umbrella. So, but the insiders of these companies that for example, the case of Kite, if you Google it, once again, learn how to use Google, they were dumping shares of Kite Pharmaceuticals, they were dumping shares of Umbrella, they were dumping shares of GoPro, and they were probably dumping shares of Under Armour. So after the crash in Under Armour, that is today, that is meanwhile shares they plunged more than $20 per share, so the company lost an important market cap in terms of dollar amount. It happens that today Jim Cramer said in the morning, I don't like Under Armour anymore. So where was Jim Cramer, your favorite hero, the American hero, when Under Armour was trading above $100? Probably saying that Under Armour was equivalent to Nike, buy. No, buy, sell, and this company collapsed. So the title is How Goldman Sachs is blowing entirely your portfolio, and if you lost money following the suggestion of Goldman Sachs, American Express, Kite Pharmaceuticals, Abercrombie, and so on, it is entirely your concern, since this information, it has been available for free at stockmarketlive.tv. Thank you, and